If you're a veteran or a member of the U.S. military and you're considering purchasing a home, you really need to take a look at the VA home loan. In today's video, I'm going to share everything about this awesome loan program, the best in my opinion, and we're going to dive into topics like credit score requirements, income requirements, what type of homes you can purchase, how much of a down payment you're going to need, spoiler alert, you don't, and all of the other things that you need to know about this VA home loan. So if you are considering purchasing a home, you really ought to check this loan program out. All right, let's go ahead and jump in and let's talk about who's eligible to purchase a home using their VA home loan. And what I mean is your military status. What the VA says is that if you are an active duty member of the military, if you are a veteran, if you are a surviving spouse of a veteran, and there's some qualifications there, if you're in the reserves, or if you're in the National Guard, you're going to be eligible potentially to purchase a home using the VA home loan. Now what's really important to remember is that the VA says that if you have 90 days of active service, then typically you're going to be eligible to get that VA home loan. So if you were active duty for a continuous 90 days, then you're going to be eligible to get that VA home loan benefit. The other way to do it, let's say you're in the Guard or the reserves, you've never been active duty that long, then 6 years of service. 6 years of service is usually going to be what it takes in order to get you eligible for the VA home loan. There is a process with the VA that we go through, and we're going to talk a little bit about this more in the video, but the process that you go through with getting the VA home loan is you have to obtain what's called a certificate of eligibility. So we'll talk about that in just a few minutes. The credit requirements for the VA. Now, this is going to be coming as a shock to a lot of you watching this video because some of the biggest advertisers in the VA space tell you that you need a 620 or a 640 credit score. Here's the reality. VA home loans have no minimum credit score. There is no minimum credit score required for a VA home loan. The VA does not publish and say, hey, our guidelines say you've got to have X credit score. That doesn't happen. What you're going to see, like I just said, is most lenders at these big box lenders, you know the names, they usually have veteran or military or something in their name. They're going to tell you need a 620, maybe even a 640. But that's not true. In fact, most brokers are going to have a credit requirement of 500 or less. Here at our company, we work with veterans that have scores of 500 or less. But we get emails all the time from different lenders saying, hey, look, we don't care what this, we don't have, not that they don't care, we don't have a credit score requirement. We'll go down to 400, whatever it takes to get the deal done if it looks right. The primary lender that we use for the lower score VA loans, they're willing to go down to a 500, and we're willing to go down to a 500 as well to help you get that VA home loan. The important thing to remember is that a lower credit score equals a higher rate, right? It's going to equal a higher interest rate. So you've got to keep that in mind whenever you're talking about using your VA home loan. If your scores are on the low side, you probably won't qualify for the low rates that you're seeing advertised. They're going to be a little bit higher. But let me just tell you that even with the higher rate, buying and owning a home with a VA loan still very likely outweighs renting and the cost of renting. So keep that in mind. Let's talk about some of the credit issues in VA loans. If you've got a lower score or if you've had some past credit issues, then that's okay. One of the biggest myths on the VA loans is that they're not very accepting of past credit issues. And honestly, guys, nothing could be further from the truth. VA loans are the literal most flexible loan program when it comes to being able to purchase a home. So the VA is going to give you an ability to purchase a home even if you've got collections, if you've had charged off accounts. In fact, with charged off accounts, typically, we don't even have to count them. Even if you've had late payments, mortgage late payments, those can be a factor. If you've had more than like one 30-day mortgage late payment in the last year, then that's going to be a conversation and you may or may not qualify. It's going to be more on a case-by-case basis. If you've had bankruptcies, okay, the VA is going to give you leeway in bankruptcies depending on the bankruptcy type. And I have a whole video I'll link right here where I talk about how to buy a home if you filed bankruptcy. So you can actually get into the nitty-gritty of that and see, based on the type of bankruptcy that you filed in your particular situation, what happened and what you're eligible for. The other thing is they're gonna give you room for foreclosures. The VA will allow you to purchase a home if you've had a prior foreclosure, even if that foreclosure was VA related. It's really going to come down to what your benefit remaining that you have is left, how much of the entitlement was charged because of the foreclosure, what your bonus entitlement is, and those types of things. So there's opportunities for that. So if you're watching this and you've had a foreclosure before, don't think, oh man, I'll never get a VA loan, there's opportunities to get a home even if you've had a foreclosure, short sales, those types of things. They all kind of fall under the same umbrella. VA loans are very accepting of credit issues and past credit issues, which is why they're one of the most flexible loan programs. They are the most, in my opinion, flexible loan program out there. So if you're a veteran and you're watching this, there is hope even if you've had some issues. The next thing I want to jump into is the VA interest rate. So a lot of times there's a big name dude. His name's Dave Ramsey. You guys have probably heard him. And man, he just craps on VA loans and he says they suck and all these different things. He literally could not be more wrong about the VA loan. And the VA loan, if you're shopping with the right lender, is gonna have interest rates that are lower than even conventional interest rates. If we were to go price out a VA loan and a conventional loan for you right now, the interest rate on the VA loan would be cheaper than the interest rate on the conventional loan. And VA loans also, which we're gonna talk about here in a second, they don't have PMI. There's no PMI. Mortgage brokers are typically going to offer you the lowest VA rates. And the reason for that, the reason why brokers are able to offer you those lower rates are because they are capped on how much they can earn. When you go to the big box lender, when you go to a retail bank or your bank down the street, unless they're a broker, and 9 times out of 10 they're not, they can charge almost unlimited amounts of money to do these loans. And statistics have shown that VA loans are the most profitable loans for most lenders. Because of that, their rates are going to be higher. That means you pay more as the customer, so the bank can earn more. And we just don't think that that's right. So mortgage brokers, because we're capped on what we can earn, we are typically going to have much cheaper VA rates than our big box and retail lender competitors. So you definitely want to shop. You definitely want to shop that rate. At the time of filming this video, even a person with like a 640 credit score could get a VA rate somewhere around 2.75 to 3%. Now that's not perfect credit, it's decent credit, it's not perfect credit. But at the time of filming this is just an idea of some of the rates that are available whenever you're purchasing that VA home loan. And like I said before, as you can see here, the VA loan doesn't have PMI. So there's no private mortgage insurance. There's no mortgage insurance on a VA loan. This will literally save you hundreds of dollars on your payment every month. And that's one of the biggest reasons, the no down payment, the no PMI, that makes the VA loan so great. It's what makes the VA loan the best loan available in my opinion, because typically when you don't put 20% down, 25% down, you're gonna have private mortgage insurance. It's gonna stay on the loan for 5, 6, 7, 8, 9, 10 years, depending on equity and how much you pay it down. And it's going to cost you $100 to $150, $200, sometimes more a month, depending on the loan amount that you go with. By not having that, it allows you to, number one, save money or increase your budget. If your payment needs to be at a certain amount, and you were to go conventional, well, you may only be able to buy a house, let's say for $180,000. Whenever, if you use your VA loan, you can purchase that. You can use that same loan, that same payment, and buy a house for $200,000, maybe even $220,000, because of the difference that the PMI is going to make. Here's where the VA loan is criticized. Now, we see a lot of people talk about the VA loan. We see a lot of people say they're not great. Here's where the VA loan gets criticized. Like the USDA loan, like the FHA loan, the VA loan is going to get criticized because they charge a funding fee. And unlike FHA and USDA, they're not charging it up front and in a monthly amount, which is known as PMI. They're just charging an upfront amount to help the program survive. If you're a first-time user of the VA loan, that funding fee is going to be 2.3% of your loan amount. So if you're purchasing a home and it's your first time to use your VA benefits, 2.3% of the loan amount will be charged to you as a funding fee. This can be paid one of two ways. You can pay it out of pocket, meaning it's part of your closing costs, so it's not rolled into the loan, or you can do what most people do, and that's rolled into the loan and you never really see it. So if you were to buy a $100,000 house, then you're looking at a $2,000, $2,300 fee that would be rolled into that loan. So instead of $100,000, your mortgage is now $102,000. You can look at the payment difference. If it's $5, I'd be surprised. So it doesn't make a huge difference on the amount that's being charged to the veteran. If it's your second or beyond use of the VA loan, meaning you've used your VA loan before, that funding fee does go up to 3.6%, which again is a little steep. Now you're rolling $3,600 or so into the loan instead of the $2,300 in that same example, but it's still a zero down loan. It still can be rolled into the loan, especially if you're in a position where you're a first-time home buyer, or you're in a position where you don't have a lot of assets and you need to purchase another home. Like you've used your VA home loan before where you lived and now you have to move to a different city, or any type of scenario that could potentially come up. It's still going to be a good thing. If you don't have a down payment, it's the best thing. Here's the great part is that I think statistically the VA says that somewhere around 26% of its members, active or veterans, have a service-connected disability. If you have a service-connected disability, which I'm not saying is a good thing, I'm just saying there's no funding fee. That's what I'm saying is the good thing. This does not apply to you if you're receiving benefits. If you're receiving monthly benefits from the VA as a result of a service-connected disability, then you don't have a funding fee. So you get a zero down loan with no PMI and no fee rolled into the loan. That's way better than conventional. Conventional could never touch that. So the only thing that conventional would have over you is the funding fee, because the VA would charge the funding fee if you don't have that service-connected disability. But then you have PMI, and you can calculate the cost of the PMI over 5, 6, 7 years, and you're looking at about the same or more that you're going to pay in PMI over that funding fee. As you can see, this is a great opportunity for veteran home buyers to be able to go in and purchase that home. Let's talk a little bit about the loan income requirements. What do you have to earn in order to be able to use a VA home loan? What does your income have to look like? Well, if you're currently active, we can use that, and we can use your BAH as well into that calculation, right? Your BAH is going to be over and above what you're receiving from the GI Bill. If you have regular employment, 2-year employment history. Doesn't necessarily have to be at the same job. You just need to have 2 full years of employment history total, so that we can begin to process that loan and use that income. If you're self-employed, we need 2-year history. Self-employed borrowers must have a 2-year history. This basically means we need tax returns. It isn't basically, it is what we need. Tax returns for 2 years. If you have not filed 2 years worth of tax returns on your self-employment income, the VA will not allow us to use that income, so you would have to wait to purchase a home until you had the 2 years of tax returns. And this isn't just self-employed borrowers, this is also 1099. The mortgage industry considers them both self-employed, but a lot of times you can be a contractor for a company and get a 1099. You got to have 2 years of 1099s, and they're averaged through your tax returns in order to use that income. You can also use any Social Security benefits you have and disability. Both disability, Social Security disability and VA disability are benefits from the VA that you're paid monthly as a result of service-connected disability or whatever you have going on. Those can all be used in order to use as income for your home loan. So one of the sticky situations, though, that I want to talk about, a lot of times, you guys, when you come back, you were active, and maybe you're not going back to the job you had. Well, we've got to wait until you get back earning an income from your employer, either the one you had before deployment or the one you're going to, and there needs to be some time on that job in order to be able to use it. The VA can be particularly strict about this portion of it. They really want consistent income because that's how you repay the loan, right? It's called ability to repay, and they want to make sure that you have that ability to repay. We can use all of this, but just know, like, if you've changed jobs or you're going to change jobs, that it's probably better to wait until you get the new job, because it'd be like sticking a stick of dynamite in the loan process and it would just blow everything up. Just wanted to give you that kind of little detail on that, to kind of go over that and share that with you. Let's talk about additional income requirements. When you're talking about purchasing a home, one of the biggest factors that people are looking at is called your debt to income ratio. Your debt to income ratio. And that is the amount of monthly debt you have divided by your income. Just as an example, if you were earning $4,000 a month, we would take that's your gross income, and I don't have a calculator in front of me, so this will be fun. 10% of that is going to be $400. Let's say you have a $200 a month loan, you've got a $100 a month credit card, and you've got a $400 a month car payment, and then $100 loan, and that equals $800 a month. Your debt to income in that situation would be 20%. But we also have to add in the loan payment. Whatever your mortgage is going to be, we have to add that into your debt to income as well. So if your mortgage was going to be $1,000 a month, that would bring your total debt to $1,800 a month. That's going to put you right around somewhere around that 45% DTI mark, somewhere around there. I'm not doing a calculation on a calculator. I'm doing it in my head, so I might be off a little bit. But the cool thing about the VA loan, there is no debt to income restrictions. You can go up to 60, 70, 80% if you get the automated approval through the automated underwriting system. The problem is most lenders are going to cap you somewhere between 50 and 60%. It's very rare that a lender would not issue a cap on that. The other thing is that if you don't get the automated approval and you've got to go to a manual underwrite, it's a 41% cap. So your DTI is restricted to 41%. That's your back end, right? So that's your back end. That's the calculation we just did. Now, you can exceed that 41% if you have something called compensating factors. Compensating factors. This could be things like reserves, no payment shock, which means your mortgage won't be more than 25% of your current rent. And there's a few other things in there as well. That would potentially allow you to go over that 41% DTI restriction. But for most of you, 50 to 60% on an automated approval, you're usually going to be good. If we've got to go manual, so those of you who are in that lower credit category, if you're under 580 for sure, probably looking at a manual underwrite, then we're having to kind of reduce that amount that you're able to purchase, right? Because that's what DTI is. DTI is really what determines your home price. Your DTI ratio is going to determine whether you can buy a $250,000 house or a $200,000 house. It really doesn't have anything to do with your credit score other than your interest rate makes your payment lower or higher. The DTI is where that comes in. So you could have a guy that has a 500 credit score but makes $20,000 a month and he could buy a lot of house. But the same guy could have a 720 credit score and only make $3,000 a month. He won't be able to purchase as much home, nor would he want to. Just kind of wanted to share that with you that, it doesn't have DTI, but DTI does determine, in a way, how much you're going to qualify for when it comes to that VA home loan. Let's talk about what types of homes are eligible when purchasing a VA loan. So you want to know, what can I buy? Pretty much any type of home is going to be wide open. A single family home, which is just kind of your standard house. A condo, you can purchase a condo using a VA home loan. However, it needs to be on their approved list. VA has a list. If it's not on there, it's a whole process to get it approved. It can take a while, so if you're in a time crunch, something to consider because the lender has to go to the HOA of the condo and collect all kind of documents they usually don't want to give to get it on that approved list. If it's not on the approved list, it's kind of hard to do. You can buy townhomes, you can buy a manufactured home like a mobile home, and you can do a 2 to 4 unit multifamily duplex style home as well. And there are tons of videos out there, and I plan to do one soon on you could do VA house hacking. Buy a fourplex with your VA loan. As long as you live in one of them and you rent out the other 3, well, now you've got 3 investment properties. You're paying for your mortgage, and then as long as I believe you stay there for 1 year, and then you can kind of go over and do the same thing over and over again. So that's what they call VA house hacking. But you can purchase any type of home when it comes to using that VA home loan for the most part. All right, let's talk about, in addition to what types of homes are eligible, what are the appraisers looking for? What's going to get the home approved or not approved as far as the quality and the condition of the home? Well, the VA says that it cannot have any lead-based paint or wood with dry rot, fungus, or wood-destroying insects, so like termites. It must have working electric and HVAC systems, so your air, your cooling systems. It must have continuous water supply. It must have sanitary facilities. And you must have a way to dispose of your sewage properly, a proper sewer system. It's got to have adequate roofing that's in good condition. It needs to be accessible from a public or private street, and it must have proper ventilation in attics and crawl spaces. Now, in addition to that, the VA says that it also must have sufficient space for things like living, sleeping, cooking, dining, and other daily activities. There are other requirements pertaining to encroachments, utilities, zoning, and more, but the basic gist is that the house must be free of hazards and generally safe for inhabiting. So if there's another criticism of VA loans is that the appraisals can be kind of tough. And the only reason that the appraisals are viewed as tough is because they require the home to be in good condition. But these are the same standards followed by FHA and USDA. Pretty much all government loans are following these same guidelines. The house, basically, if you want to understand it best, it needs to be move-in ready, right? It needs to be move-in ready. you're not able to purchase any type of fixer-upper using the VA loan. You need to be purchasing a home that's move-in ready. As long as the home is move-in ready, there's no chipping paint, no broken glass, there's flooring and all the stuff that we just talked about, then the home is usually going to be okay. If they go out there and they see rotting wood and they see the woods cracking at the bottoms and indicating termites, a lot of times they're going to make that be taken care of. They're going to require some type of remedy to that, whether it's, I've seen them have to tear sheds down or completely rebuild them or repair them. If everything is okay, the home is move-in ready and the structures are okay. So this is sheds, garages, anything that's even not attached to the home will fall under these same standards as well. So how much home can you purchase with the VA home loan? How much can I buy? Well, the VA loan limits for a standard VA loan are going to be $548,250, but there's also a jumbo VA loan of anything over that amount. So if your loan amount is anything over $548,250, you're going to go into a VA jumbo category. There's typically more difficult credit requirements. So you guys on the 500, 580 end of the spectrum, probably going to be capped at that $548,250. But if you've got good credit, if you've got low DTI, then you're going to be able to utilize that jumbo VA loan. Here's the best part is that it's still zero down. And that's a recent change. I believe in 2019, this changed, late 2019. Used to, if you purchased a loan over the county loan limit, which again, for most of Louisiana and most of the country, as long as you're not in a high cost area, is $548,250. If you're in a high cost area, I think it's 8 something. Then you would have had to pay the 25% difference. If you bought a house over 548, you would have had to put something down. Now it's not 25% of the total loan amount, it's 25% of the difference of the loan amounts. It's a complicated calculation, but that's gone, right? So you don't have to put a down payment no matter what your loan is anymore. It's just that most lenders are going to have a little bit tougher requirements if you want to go over that county loan limit of $548,250. That's the loan limits. I hope you guys can see, like, as a result of this, that the VA loan is a fantastic home loan program. And if you're a veteran and you're thinking about buying a home, you really owe it to yourself to look into the VA home loan. Even if you've been told no by somebody like the big box lenders with VA or military in their name, even if you've been told no by your local bank or some retail bank, if you haven't spoken with a broker, if you haven't spoken with someone that can be very flexible on these requirements, then you really should, because it could be the difference between you purchasing a home and not purchasing a home. The VA wants to help vets. They want to help vets get in the home. That's why they make this loan program so flexible. I appreciate you watching. There's another video that's going to be linked right here where I go over 10 common myths with the VA home loan. Definitely click that, check it out, because there's a lot of misinformation out there and it's going to help you be better informed.